Welcome to Mad About Money. Today we're going to talk about what is happening with the election, what it's going to do to markets, the global macro environment in general, and we'll also discuss what's happening with banks as they've been getting hammered across the globe. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. So Paul, first question, the election, I don't think anyone's missed it. There still hasn't been a result yet. We've got essentially a hung parliament, or possibility of a hung parliament, I should say. Give us an update as to where it's at and what you're expecting to happen.
I think you can make one important conclusion this morning, and that is Labor will not form government.
Okay.
And that's a real positive for the markets. And the reason for that is that the postal votes are flowing the same way they did as in 2013, quite strongly to the coalition. So that's the positive. So there won't be Bill Shorten.
Positive for business.
Positive for business, positive for the markets. Bill Shorten will not be the next Prime Minister. Now the question is whether Malcolm Turnbull is a Prime Minister, whether he's got an outright majority or has to rely on the support of some independents. The experts think it'll be somewhere between 74 and 76 seats. I'd probably lean closer towards the 75, 76 mark, but that will take 3 or 4 days to pan out. So,
can you form government with less than 76 seats though?
Well, it'll be pretty hard, but you can. But
with an independent?
Well, 150 seats, you need 76 to get anything through. Look, there's at least one positive. Bob Cattle is likely to support the coalition, so that's one independent they can rely on for most matters.
North Queensland will do pretty well out of that?
Yeah, North Queensland will do pretty well. There'll be some big spending up in Mount Isa and other places.
They'll get that football stadium probably.
They'll probably get a few other things. So look, I mean, they can get there on 74 or 75, but look, I think that's a positive. But you know, just how strong it's going to be, whether they can get their mandate through. Look, those things are still in doubt, and with the Senate the way it is, you know, you can imagine there's going to be a lot of compromise. So I think we've sort of seen, I looked at the last 2 days, the market shouldn't have rallied on Monday and it probably shouldn't have come off as hard yesterday. Over the course of 2 days, it's probably about where it should be. Look, it's not great for Australian government and Australian fiscal restraint. You got long-term risks ahead.
Yep. Now, a lot of global volatility on the back of the Brexit. Obviously, some concerns in Australia, but primarily related to Brexit, fear of contagion. You know, big payroll number coming out this weekend, which will be important for the markets. What's your take globally on markets in general?
Really interesting. I mean, obviously, huge. Everyone just wants yield, and so the flight of money both into things like US Treasury bonds, bonds around the globe have just been crunched in their yields. Last night, a huge move back into the Japanese yen as safety, so sort of a risk-off trade. I mean, the US market last week had its best week I think in 3 years.
Not far from an all-time high.
Not far from an all-time high. There's still a 2,100 barrier which you can't seem to get through. Huge number coming out, as Peter wrote on Monday, in terms of the employment number on Friday night our time in the US.
Expectations for between 160 to 180.
160 to 180. I mean, if that's a really strong number, it may give the US market a bit of a fillip to actually have a go at its high. But in the meantime, against that, we're getting some numbers suggesting that concerns about growth, global growth, oil price coming off a little bit.
5% last night.
Yeah, this flight into safety in terms of both government bonds.
Good for the property trust, isn't it? These low yields.
Great for property trusts, great for the infrastructure stock, great for utilities, but getting super expensive. So anything which is reasonably can generate a yield and doesn't have too much volatility has just got bid up, and that's all we've seen the markets doing. So risk-off trade. I think we're in for a couple of tough days ahead. I mean, this result, coming back to the election here, is not going to be looked on that favourably from offshore, and as more reaction comes into our market, it's a bit of a negative, I think. 5
Prime Ministers in 2 terms.
5 properties, maybe not a 6. I think we can rule that out this morning. So we've got a negative lead coming in from Wall Street. I think the election result is actually a bit of a positive, but in this environment, I don't think anyone wants to do anything. So the chances are the market's just going to ease off.
Now let's move on to banks. They've been hammered globally, particularly the British and the European banks. Charlie Aitken was on the show last night. He said he had some concern around the Italian banks. In general, what do you see the likely outcome for bank stocks moving forward?
Look, I still think some negative leads, and obviously the Australian banks can't stay immune from what's going on in Europe and in the US. Again, the financial sector is still the weakest sector in the US market. It's the weakest sector in the European market. Again, the Italian banks, a bit of strife again last night. Negative leads for our markets. You've got APRA talking about capital. Look, I think they're going to be okay, but I think there's more pressure. So I think if you're looking to invest in banks, I think time's on your side. There is certainly, until you start to see the momentum change a little bit, I don't think there's any rush. So, look...
Dividends in Australia likely to hold up?
Dividends, I mean, that's one positive for our market. A lot of people, ANZ, National Australia Bank paid its dividend on Tuesday. The other two majors paid their dividends this week. So there's going to be money coming back into our market, which is a bit of a positive.
Unless the banks can't pay their dividends, there's no upside them in not paying them, is there?
No, I think ANZ, it cut its dividend. NAB may cut its dividend marginally, but I think people will now turn to the Commonwealth Bank half-year report, or full-year report, I should say, out on about the 10th or the 11th of August. That's a big sort of next milestone for the major banks, just seeing how it's tracking in profitability, see what its dividend policy is. I guess it's going to be unchanged. I think banks will be good buying. I just think you've got a bit of time on your hands, and if you're nibbling today, then do a bit of nibbling and then wait a bit longer.
What would be the point at which you would say is a good time to buy the banks? What would be a key indicator?
I think if the profitability holds up for these banks and their capital ratios are on the up, I think that's...
So after the earnings season?
Yeah, let's get the election out of the way. Let's rule off any fear of a Royal Commission. Take that off the agenda. We need APRA to come out and really just opine about what they're going to do with all the sort of the Basel IV changes. There's still some way out on the horizon.
Just needs certainty.
Needs a bit more certainty, and of course, the lower bond yields go, I mean, that's the more attractive dividend yields than the banks get. So
good for dividend growth stocks.
It's good for dividend growth stocks, Marty. I just think you've got a little bit of time, so I like them, but I don't think you need to rush in just yet.
Paul, thanks for your time. That's all we've got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.